Okay, today, Rob Ellis, Horizontal Land Partners, and Pink Development Construction, and this is our Florida, Miami channel. Today, we're going to be covering a concept that I've coined called the housing tower. And the housing tower, the idea is that lot size drives, there's no lots, and then you get to a certain point where you have a piece of land up to a certain point, and then as the market values go up and incomes go up, you lose that single family home detached product and you don't own it anymore. Those are condominiums, high rise condominiums. So if we go to just Zillow and we go to Florida real estate, the entire state, what is the cheapest land? What's the cheapest house for sale in all of Florida? This covers most of the state, I would say. Let's go all the way up to Gainesville. 200,000 different types of housing. And we're going to sort it by low to high. What is the cheapest? You're going to see mobile homes here or auctions, all sorts of stuff, right? If I modifier a small modifier on it, $5,000, that's going to get rid of all the junk. Let's just go to monthly payment. Let's go to what kind of house? $250. That'll get rid of this stuff. So what we're left with is mobile homes, 70s mobile homes. Mobile homes, these are cars. Like imagine a 50-year-old car. That's the way that you see a mobile home. Non-attached housing in a trailer park. And you're going to see areas that have been overbuilt. Newport Richey, Northport, these areas are plagued with overbuilding. All the builders came in, bought up all the land, put in hundreds of houses, and the prices have gone down so low, it's overbuilt. There's no absorption. And sometimes when you look at housing trends and you have land, you have to look at what do I do with it? We've offered on deals right here in Central Florida and what's there, South of Central Florida. And that's north of Okeechobee, east of St. Pete, south of Kissimmee. We've looked at that corridor this week. And the thing that you look at is what is the average income in somewhere in like Hardee County, Florida, average income? $30,000. Now that person can spend about 35% of their after-tax income. So if we go to Chat GPT, how much can a person making 29,000 a year afford for housing? $700. You might be able to get a studio. So if I'm coming into a market and I want to rent something for $600 or $700, I need to look at you can't get a detached home at that price. The lowest price home that is stick built on a slab is around 267 in Florida. If the lowest cost housing unit in the entire state of Florida, stick built, is 267K. What do you need to make an income to pay for that? $58,000 a year. So our investment thesis is that in counties that aren't that, if I want to develop in all of Florida, horizontal land partners, right? If I can get cheap land and make $1 million on it, if I can get 20 acres, what should I put there? I could put non-housing. We've looked at 8-acre tracts of land or 3 acres that Tractor Supplies are that sell for $5 million. That would be a carve out. So getting utilities to cheap land is not that bad of an idea, but you need to be able to afford or justify what it is. So we've seen land go for up to 20 million for about 40 acres, which is, if land trades at 20 million for 40 acres, what would that be per acre? This is a mobile home park that we ran the numbers on. And so, how big is a mobile home pad? What is the density of a mobile home pad? Single wide. So 3,000. So this idea of you're not owning the housing, you're owning the infrastructure, the land, and the pads, and someone could come in, demolish them, and tear them down. Tight platting, minimal roads. And we looked at this yesterday. We saw some that were 6 or 7 if they were double wides. So you're actually seeing the same density. In Central Florida, this is why we call it the housing tower, because if I came up with the idea of a housing tower by income and by lot size, areas like Hardee, Florida, or I mean, it was Lake Wales or Wauchula have incomes that support private market housing, which is mobile homes. Up until after mobile homes, it's cross modular with stick built garage and pad and factory built factory built panels. Then there is 267K for a single family detached ranch, and then 2-story small houses. Then move up starts around 400K and keeps going. There is attached, but we still think all detached housing tower and all attached housing tower or apartments are easy. There are some places you can't build, and to do it, you need mobile homes. Plus, Florida, I think it was 1 in 11 people lives in a home. So basically, we look at more flexible zoning and say sometimes you need a mobile home park or LIHTC. There are various housing types that start and vary by incomes. Can you show this or describe it in a detailed part? Single family detached then can go all the way up to 80 million in Palm Beach County, and single family attached can go up to 1 billion in like a detached or a high-rise, condo, and brickle. Can you show both sides of the housing tower, attached and detached? Housing tower by income and lot size, attached. The housing tower income-based progression of housing types, separated into detached and attached paths. This conceptual housing tower organizes residential products along two parallel vertical tracks, detached and attached, with price and construction complexity increasing as you go up. Each level reflects what income tiers can reasonably support, and zoning must flexibly enable the bottom rungs in underserved markets like Lake Wales, Wauchula, or Hardee County, where mobile home and hybrid homes are often the only private market entry point. Mobile home single wide, 30 to 70, factory built. Household income, 20 to 30. 1 in 11, often land lease or mobile home subdivisions. Cross modular, 70 to 150. Factory built, whatever, and garage pad. That's still FHA eligible HUD units, site built elements, use where zoning allows more flexibility. Stick built small ranch. That would be 45 to 70,000. First rung on traditional single family lots under 6,000 square feet in towns like Lake Wales, which is true. You're seeing that now. 2-story small SFR, 270 to 400. Traditional 2 stories, 3 bed, detached, 45 to 60. Move up. Customizables, 100 to 175. Larger lots, garages, premium materials, often in suburban MPCs or HOAs. And then luxury detached estate. Custom and luxury builds, 250,000 to 2 million. Coastal, equestrian, that kind of stuff. Attached housing tower. Tax credit apartments, typical price range. 2 to 3 story walk-ups, 18 to 40,000. Publicly subsidized private housing built where market rents can't support private builds. BTR, duplex, triplex, and quads. Slab on grade, 35 to 65. Small lot infill or rural rentals help unlock zoning barriers where multifamily is disallowed. Townhomes, 250 to 400. Stick built, shared wall. Entry level SFR, FHA, efficient land use at 8 to 12. So if land's expensive, if infrastructure was expensive, you need to push the density, things like that. Okay. Mid-rise, condos and apartments, 400 to 1 million. Podium and elevators, 100 to 250. Urban infill or lifestyle, condos and land costs. High-rise condos, 100 to 50 million. Steel and concrete type 1 buildings, Miami, Brickell, Naples, ultra luxury. Land cost and zoning flexibility determine whether the lower rungs are viable. In areas like Wauchula or Lake Wales, the private market cannot build stick built under 267. So mobile homes, LIHTC, or modular hybrids fill the gap. Urban cores require vertical housing form, but much of Florida is still horizontal by culture and zoning. Home ownership versus rent is often dictated by income, but land control and entitlements enable creative solutions at entry level. 9% of Florida's mobile home residents live in mobile homes. Median price is 410. Median household income is 67, which affords a $250,000 home. Huge missing middle housing gap between 880 and 300,000. We're really been focused on the 267 to 300, and as you get lower, what do you think of this concept? Florida's fragmented. It aligns product to income. You've recognized that income is true zoning constraint, not just code. Structuring housing types by vertical tower. You're helping cities become rational choices. It bridges public and private weaknesses. Political resistance at bottom tiers. Small lot zoning and mobile home parks are unpopular. Your concept needs clear narrative support. It assumes ideal zoning flexibility. Many places don't allow your tower prescribes, especially the base layers. You'll need a strong zoning unlock. Cross modular still lacks broad underwriting acceptance. With site built FHA and VA still treat them cautiously. You want to track which builders accept them. It's 9 out of 10. Can you add a rental component to both housing tower descriptions as well? We think that that area between 267K and 300K is where 325, I would even say up to 325K is where there is the most land opportunity, but we aren't afraid to lower the lower rings for mobile home parks at high density. And basically, the idea is 1 in 3 people rent, but in these other submarkets, I think it's lower. And so when national builders or income are not in the area, we look at rental product for horizontal development. What do you think of that concept? Put together the whole article at institutional level scale. And then we back that by county migrations and average income. It's a sophisticated institutional level housing thesis. In underbuilt or underserved Florida submarkets, homeownership rates are artificially elevated because there's no rental product, not because people would rent. Your approach is to recognize where national builders don't go, overlay county level income and migration data to size latent demand, and deliver horizontal rental product as the only scalable form of unsubsidized housing. Yes, we are institutional level advisors for the private markets mostly. The horizontal housing tower, income aligned housing strategy for underserved Florida markets. Across Florida is low income renters, right? With construction costs for buyers earning under that, and there are no rental alternatives permitted by local zoning. The dual housing tower, detached and attached ownership and rental. We classify housing progression across 2 vertical tracts, detached housing and attached, and then horizontal and vertical. Yep. And so we look at even Miami-Dade County. The average income, they aren't owner heavy by purpose. They're owner heavy by default. The lack of rental inventory, particularly for income bands under 55, means demand is suppressed. 267, sweet spot where private developers can still entitle small, deliver BTR, reach, offer rents between 12. Land trades in this zone remain viable. Mobile home pads, 2-story BTR, and then land backed yield ready. Okay. And you make it even longer, as in depth as possible. Expand on the counties like Polk, Pasco, Hillsborough. So the idea, we're looking at what's the floor of a county income? Where won't we go? If I'm all of a sudden making offers on any land here, I'm not doing it because our business plan is relying on selling to institutions, and there's not that many mobile home People need to be able to rent your home. The cost of a housing unit at the lowest price is maybe 200 to 250. And that's the counties that can rent or buy that is the lowest floor where we can go. We can't go any lower. If our exit strategy is to sell to institutions, we're not going to land bank. We couldn't count on it, but we're not speculative. We're in and out. And if we're going to take a massive land position of 1,000 acres in Florida, we have to have it backed by data. So we look at these reports. We bring up the top of 2024. And we say, how do income compare in the fastest selling it shows the housing tower and it shows where this starts. Real home ownership starts at right here at the rents. You need the income to that. The villages, the median household income in Sumter is 63. Murata, it's 61. On top of the world in Marion County, 52,000. These absorptions show that MPCs thrive not at the top of the income curve, but at the floor of scalable, stick-built pricing. They're designed making 50 to 75 and 267 to 350. The most successful are in counties where traditional underwriting would wrongly claim that buyers cannot afford and set a floor on the county income for our development. That's where renters are, where buyers are, and where MPCs are. What do you think? At 267K, where is that? That's it for stick-built national or regional builders. Anything outside of these counties, the floor, that means there's only a certain number of counties I can do business in. 50,000. So land pricing deltas is what we're looking at. If we're selling to builders and that is our thesis, there's a floor and there's only a certain number of counties that we can build in Florida. And this goes by any state as well. For Florida, it's still thinking. But the floor is there's only a certain number of counties, and then there's land delta mismatch. There's only a certain number. And in our thesis, it's not just metros that it's not just city metros, because where I'm from in Ohio, there's counties that you can justify purchasing it that are not major metros. And that's exactly what we're trying to figure out. And so using census data, we can these counties, no, we can do any county above that. How many are above and how many are below that in Florida? We can sell any level of housing, but we can't sell it to those who can't afford it. It's saying the same thing over and over. So you see here, this is one of the places, Dundee, Hardee County. Median household income. Let's just pull this out in an Excel sheet. So this actually shows it's surprising. Let's go back to here. This is better. I think this actually shows that all counties we can develop in Florida. There is not one county with an income under 50K. Let's see if that's right. Let's see if it's right. Update into the housing tower, showing that even in rural Florida, where there is infrastructure, how many percentage counties we can build in. And that's the biggest takeaway. The land horizontal mismatch. That incomes are there, housing type isn't. And Florida has 25, 26 builders that can deliver housing under 300K, but the land entitlement is the issue. This is the strongest thesis yet. We won't develop in the 10 counties that are below that. Make sure to list them. But all the others, it means we can almost do land for any entry level builder almost anywhere in the state. This is our strongest thesis yet. And it's, if you look at this concept of the housing tower, this is the idea. And the horizontal housing tower income aligned strategy for Florida's underbuilt growth markets. As Florida's explosive growth continues into its second decade, a structural problem unsolved. Most counties have no legal, economic, or physical path to produce housing to households earning below 70,000. Our housing tower framework, we introduced a two-track vertical market, detached and attached, along with income bands, structural types, and tenure, own versus rent. The model reveals that in dozens of Florida counties, a third of the population rents, but most new product is only for the top 25% of incomes. By focusing on that 267 to 350, the renter by necessity population is builder absent markets. We reveal an overlooked asset class, horizontal rental housing built at scale in underzoned, underwritten counties. This price range, we propose establishing a county income floor of 50,000 as a practical benchmark. Incomes below this require subsidy or factory housing and deliver affordability. Incomes above that, especially in the 55 to 75, are where absorption, traditionally still home detached or townhome, become viable. National and regional builders consistently strong in this price band. It matches the profile of high absorbing master plan communities. At 267, a household must earn approximately 75, making the bottom rung for unsubsidized stick-built ownership in America. Where we can build. 58 of 67 counties meet the income floor. Florida has 67 counties. Based on that, 58 of them, or 86%, have an income above 50,000, which meets our minimum. A sample of those: Pasco, Polk, Fernando, Sumter, Citrus, Lake, Clay, Nassau, Santa Rosa, St. Lucia, Manatee, Brevard. Where we can't, 10 total: Hamilton, Holmes, Madison, Glaves, Hardee, Dixie, Calhoun, Liberty, Lafayette, and Taylor. And that is because they can't do it. You took out the table about that. Make sure it's in the entire And there is an outro and call to action. Make this as institutional and a 10 out of 10 with hashtags for discoverability. So basically our thesis, and it's because today I offered on that and we've looked at some of the other ones. Where we can build, where we can't build, conclusion. So this shows rate this 1 to 10. So this shows that, again, as we do this, income aligned for Florida's underbuilt growth markets. And then we are targeting land mispricing. So large land tracts starting at 40 acres under 1 million or under 25K an acre. Having an investment thesis backed by entry-level building opens up our ability to develop and work with strategic institutions who, based on preference, income, etc. Having a table that shows all of this with net migrations helps a lot. Just because a county has negative net migrations doesn't mean you shouldn't build there. The income may still be there and you are upgrading the average housing type. I'd add the cost of a median new build and median existing house and show how we are upgrading housing. So we saw this in an area in Ohio called Clark County. I'll have to look at the county income. And this shows that we lost all the tables. So when we started, it was migration driven. And of course, but when you start looking at land, and the top migration state, you can do the same in Texas. But I don't think our focus is in hybrid. I don't think it's in mobile homes. Could we develop there? Sure. But for what? We know what a lot costs, 55 to 60K. So we're just going to take this. So this concept of the housing tower is and this, we also find that this is the sweet spot. For us, it's much better to do larger tracts of land. But if we're going to go deep, we got to clean this up a little bit. It means that it means that we can't really, there are counties we can't go to. Um, and it's a focus in high growth corridors. Some of those are in the middle of the state. You know, some of these are that. And so for us, the concept is that counties with median income, this is the Florida housing benchmarks. Average existing, average new, target build price. Is that target builder exit price, I think. And also for land upside. This is the segment that we, if I had to put this into an institutional level article, utility adjoining, builder fit, or whoever's building stuff under 26,000. And so if incomes are above 50, even in counties with low or negative net migrations, you're replacing existing housing stock in a place that can afford it. You're modernizing it, which is what you see it in different versions. Florida's housing crisis isn't due to lack of income, it's due to lack of inventory in the income aligned price band. And that is the exact focus of our fund. So I hope you enjoyed this video. That's the income tower. And that's the whole point of what we're doing.